Are you from a business family? That's the first thing Gaurav Sarya asks the wealth managers who come knocking at his door. Gaurav is the founder of Infinity, a chain of tea rooms that sources its tea from Gaurav's own estates in Assam and Darjeeling. And as it happens, that question is also the first thing he asked the Ken before he sat down for a chat. He told my colleague, reporter Nuha, that his logic is pretty simple. If you're from a business family, you understand money. Otherwise, you don't. Now, Gaurav's exact kind of mindset is why references are everything in the wealth management business. Past clients and proven track records, these are the holy grail for wealth managers in the Northeast. Because headstrong clients like Gaurav from that region will accept nothing less when it comes to trusting people with their money. The thing is, a shift has been building for years. After GST, Northeastern business people started moving cash into banks, and now they want to invest it. At the same time, wealth managers have exhausted their search for the uber rich in the smaller towns of the West, South, and North India. Now, they're making a beeline for a region that tends to be a footnote in business plans, including financial services. And these two phenomena together have resulted in this: a surge in sophisticated products like alternative investment funds or AIFs and portfolio management services or PMS. We spoke to Pallav Bagaria, who confirmed the increase in demand for such products. Now, Pallav is the director of Sapient FinServ, which happens to be the region's largest wealth manager with more than 4,500 crore rupees in assets. She told Nuha that 2 years ago, AIFs and PMS were less than 5% of the company's assets under management in the Northeast. Now, that number stands at 25 to 30%. But the thing is, Northeastern HNIs aren't easy clients. They are deeply wary of outsiders. A wealth manager from Motilal Oswal told us that if you push too hard or even make a cold call, both methods which are common in Mumbai by the way, Northeastern clients will just avoid you. Niloy Day, another wealth manager and executive director at Julius Baer, also added that when you go up in the hills, people only follow the advice of those they know. Another local business person put the challenge even more bluntly. Along with the clients in the Northeast being fragmented, they also have a better bullshit detector. And for wealth managers trying to break into this fragmented, cautious circle, that makes life very hard. Welcome to Daybreak, a business podcast from the Ken. I'm your host, Rachel Verghese, and every day of the week, my co-host Snigdha Sharma and I will bring you one news story that is worth understanding and worth your time. Today is Monday, the 23rd of March. GS Road is the commercial and shopping hub of Guwahati. It's kind of a more corporate version of Delhi's Khan Market. But over the last 2 years, it's become something else entirely: the address of choice for financial firms moving into the state. The thing is, there's no shortage of money in the Northeast, and financial firms are just now waking up to that fact. Take Rajesh Majumdar, for instance, who is the Assistant Vice President at IIFL Capital Services. He remembers how his boss was surprised at spotting a Mercedes showroom in Sarusajai, which is one of Guwahati's wealthier neighborhoods. Majumdar also noted that people outside don't realize that the region has almost every top brand showroom there. Firms like Fisdom and Nuama are catching on to the potential though, especially since many Northeastern clients were already investing through Kolkata and Mumbai based managers. The thing is, with increasing financial literacy, the market has also matured over time. The older generation kept half their wealth in fixed deposits and real estate. They basically valued the tangibility of land ownership more. But the new generation thinks differently. The Motilal Oswal wealth manager noted that young people who studied in Delhi or Mumbai come back having watched their peers invest in AIFs and PMS and want to do the same back at home. Julius Baer's Niloy Day, who I mentioned earlier, also explained that this generation's wider exposure means that they're talking about offshore investments and not just land. These own visits to the region have gone up from twice a year to twice a month. Also, bonds are another growing category. Vaishali Goenka from Sapient said that the company has started pushing bonds hard over the last 2 years. That's because affluent clients who fall under higher tax brackets pay less or sometimes even no tax on interest income from bonds as compared to savings accounts. Goenka also explained that post tax, the rate of interest they get to keep is almost 1% higher. Then there are also clients who want more specialized guidance. Let's say a client wants to invest in healthcare, but they don't really care for the generic mix of pharma companies and hospitals that most healthcare mutual funds offer. So, they'll choose to go to a PMS platform that can offer them a more curated collection. The returns from this can actually be pretty dramatic. Biswajit Mandal, a Yes Bank manager, convinced a client to swap out low quality stocks for an AIF, which, by the way, requires a minimum investment of 1 crore rupees. And within 2 years, the client's portfolio had more than doubled. But that said, old habits still die hard. The Northeast is still very suspicious of wealth managers and their motives. And many wealth managers are still very confused about how exactly to win these clients over. More on this in the next segment. The CEO of one of the region's leading hospitality chains gets so many calls from wealth managers that, as he puts it, if my calendar allowed it, they would be happy to come every day. He's also, by his own admission, not a very profitable client. And nothing illustrates this better than one of his meetings with a banker trying to pitch him an AIF sometime last year. The banker kept pushing different options, even as the CEO kept refusing. After an hour, the banker got so fed up that he finally asked the CEO what was it that he exactly wanted. That's when the CEO told him he'd like to invest in a mutual fund. The banker was so caught off guard, he blurted, "But there's no fees in that," before having to apologize for slipping up like that. But for the CEO, these kind of interactions are a great filter. He said that if the managers are keen to work with clients in spite of the fact that these clients are not going to buy their high margin products, that means they are being valued long term. IIFL's Majumdar learned this the hard way as well. For 2 years, he made the weekly trip from Guwahati to Dimapur to Nagaland, Monday to Friday every week, back home only on weekends. Meetings started at 8 in the morning and ran into the evening. But slowly and surely, it paid off. The client started to call at 8 in the morning to ask if Majumdar had arrived yet. They liked the way he spoke and the ideas he had. So, they were ready to invest. Now, Majumdar knows that relationships are everything, even if it means briefly agreeing with the client's conservative outlooks. One of his 120 clients is an 85-year-old in Dimapur sitting on nearly 80 crore rupees in fixed deposits. Majumdar believes that at this age, there's no getting him to invest in a mutual fund because he just isn't aware of these things. So, all Majumdar can do is keep visiting this client and hope that at some point he may change his mind. The Motilal Oswal manager I mentioned earlier also said that in other cities, technical knowledge is enough. But here, trust comes first. And he's seen people run after clients for years just to build it. Though some of that difficulty comes from a different problem: the poor quality of wealth managers the Northeast has been able to attract. Stay tuned. If you want the truth, we're underpaid and overutilized. That's what Majumdar told Nuha. He added that even though it's the same job that wealth managers in Kolkata or Mumbai do, the difference is that they are paid 20 to 25 lakh rupees more. That kind of a pay gap has consequences. Without adequate compensation, wealth managers default to chasing commissions. They pitch insurance and other high margin products whether they suit the client or not. Goenka told us that mis-selling is rampant, largely because most firms lack proper training or oversight. For instance, Siddhant Khemka, a second generation investor, experienced this firsthand. When he was pitched an AIF, called the IIFL Indian Opportunities Fund, the local partner couldn't answer any of his questions. So the firm had to fly someone in from Kolkata to finish the pitch. The thing is, there's also a way to go about these pitches. Bagaria told us, and I'm quoting here, you can't just walk up to someone and pitch an AIF. Most managers spend years with some clients, building them up to a point where they're ready, because it's important to first understand their appetite for risk and volatility. Also, the thing is, the Northeast has less wealth managers per HNI. In Bangalore or Mumbai, 10 wealth managers might be chasing a single HNI. Majumdar said that in the Northeast, the number is closer to 3. So the only real way forward seems to be word of mouth. In this fast growing but still nascent market, a good referral remains the only way to turn someone like Infinity's Saria, who is skeptical, demanding, and adamant, into a long term client.
Daybreak is produced from the newsroom of the Ken, India's first subscriber focused business news platform. What you're listening to is just a small sample of our subscriber only offerings. A full subscription offers daily long form feature stories, newsletters, and a whole bunch of premium podcasts. To subscribe, head to theken.com and click on the red subscribe button on the top of the Ken website. Today's episode was hosted and produced by my colleague Rachel Varghese and edited by Rajiv Sien.